Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. Today is May 23rd, 2024. We had some data coming out today, initial jobless claims. I find this to be somewhat relevant, especially considering what's been going on in markets today, so I thought I'd go through this data really quick. The initial jobless claims was actually lower than expected and lower than the last ones. In other words, according to this, weekly report, jobs are stronger. Again, the overall unemployment rate tells a very different story, along with the underemployment U6 rate, like I've been talking about in many videos. So flash PMI. So this is like a rough estimate that's probably pretty close to reality. If it's above 50, we see expansion. Below 50 is contraction, and we had last 51.3. We expected to go up just a little bit, and it went up a lot more than expected, so very strong. So in other words, the price for certain that managers are paying for services is going up. Actually, that's inflationary. It's not a good thing if you're hoping inflation is going to be going down, at least from this little flash, I guess. And then the S&P flash manufacturing PMI, so this is the cost of goods. We had it 51.1, and the expected was to drop to neutral, not going up or down, and instead we went higher than both the expected and the last reading of this. Also notably, new home sales, the actual was quite a bit lower than the expected, and the last, from last to the expected, it was expected to go up, and instead we went down a good little chunk. Again, most important data in the near term is next week's Friday PCE, not tomorrow, but next week. I want to start today's show off with the S&P 500 zoomed out. This chart goes back all the way to 2000 over here on the left, but we're actually going to be looking at the peak of 2007. Gareth Soloway on his show Trading the Close, he's been talking about this chart on a number of his videos recently, and if you note, taking the very high of 2007, connecting it to the high of 2022, we basically touched that high today. His line's a little different than mine. The way that I wrote it was at the very, very peak of the top of the candle in 2007, as well as the tops of the candles and at the end of 2021, beginning of 2022, and it was today that we actually just hit that line and backed off from it. And so, as far as crystal ball rating goes, this really could, again, I'm going to say it over and over again, I don't know for how long, this really could be a top here. Notably, on the S&P 500, if you looked at what was going on this morning in the opening, if you got a chance to see the markets, it was notably higher, and I was thinking like, oh my goodness, like I'm a bear and the markets are just shooting up. Oh my goodness, like I'm gonna eat my hat. I've been saying, like, if this just keeps going up, I feel like I'm gonna eat my own hat. And and so this morning I was like, oh my goodness, and then throughout the day, wow, huge red candle here, huge sell-off, engulfing the past 1, 2, 3, 4, 5, at least 5 trading days. Not truly engulfing the day before that, but this is a very, very bearish looking candle. I'm expecting it to roll over, going down from here. It's so funny. Yesterday, the Nvidia coming out with their earnings with a 6% increase in the price, and it looked like just from that little snapshot that the triple Qs, the SMH, and the S&P 500 were like, they were happy, they were green in aftermarket hours, and then on the open today, and then taking a look at the Qs for the day, same picture. We opened way higher, and then we closed actually half a percentage lower than the close of yesterday. So very big red candle. This is, a lot of selling power into whoever's buying. I really want to meet the people that are buying this market right now and try to see what's going on in their heads. But I digress. The headline index, if you ever watch TV, this will probably be on mainstream news outlets, even non-financial mainstream news outlets. I'm guessing the Dow dropping 600 points. This is a really big drop, equaling right now 1.5% in one day. So that was out of the indices, that was the real biggest one that really dropped today. So what's causing this? I mean, some people are saying, well, I mean, from the beginning of the show, those numbers showing, potentially more inflation, going along with the Fed minutes that came out yesterday, stating that the Fed was worried that they didn't have as good of a hold on inflation. And we're starting to see this today. We're starting to see that a little bit more in the Fed funds futures. Again, I don't think anything really changed much. But the one piece that I noticed was what's going on for the June meeting, June 12th. That's coming up pretty soon. We went from, if you look down here closely, I don't know if you can see this or not, we went from yesterday's probability of actually not staying steady, but actually hiking. There is now, so yesterday it was a probability of 1.5. If you look at the longer term chart, it had been bouncing up, but basically around 1% here and there once in a while. Nothing to pay attention to, nothing to take too very seriously. However, today we went from 1.5% on a 25 basis point hike to 6.4%. And I find that to be fascinating that this is being priced in now, because Powell has come out and stated very, very explicitly, we are not going to be hiking here. And we're starting to see the markets disagree. This is very notable. This is very interesting. And I mean, is this the kicker? Is this what's, causing markets to snap a little bit today? My opinion is that I don't think so. My perspective is staying the same. I'm trying to keep it simple the way that I see it. The Fed has been strangling the economy. The hands are on the neck, and they're waiting to see weakness. And I think that's now we're seeing a little bit of weakness. People that are buying, the S&P 500, the Nasdaq, right now, in my opinion, that's fighting the Fed. And I've said before, I think it's gambling buying here more than it is shorting. And normally shorting is like, the thing that you never really want to do, but once in a while there's an opportunity that, presents itself as just too juicy to ignore. I'm not shorting myself, as I've said. I'm just imagining that when markets do crack and money floods into treasuries, that the yields will be going down, and that's just the easiest, safest for me. That's the safest, best like risk reward thing that's out there right now. Gold at historical highs. Bitcoin is way up there. All the indices are way up there. Well, I want to buy what everybody hates. Everybody still hates treasuries. Even today, when you see cracks like this, like in the Dow, you kind of expect a little bit of a run to safety. But TNX, the 10-year Treasury note yield, this is like the reverse of the value of those Treasury securities. It went up, meaning Treasuries actually lost some value today. And so it's like, again, the interplay between yields and stock valuations is infinitely interesting. Like I've said before on shows, when Treasury yields go up, it puts downward pressure on stocks. However, when there are people running away from stocks, they tend to flood into treasuries and then pushing the yields lower. And so, it's a very interesting dynamic, always. And so, I'm still gonna say the same thing I've been saying for what feels like forever. I'm expecting the stocks to go down to a more normal price, and treasuries to the value of treasuries to benefit from this. CNN Fear and Greed Index. We were in greed. We finally went down into a neutral position. When I'm looking into my crystal ball, I can see that we're headed into fear. I just know it. High yield corporate, as I've talked about often on this show, high yield corporate bonds. This is riskier money that's lended to companies. Sorry. That have to pay a higher interest rate on what they're borrowing. When this is following, when it's falling, it sort of automatically takes the legs out of the market. And I'm surprised we're not seeing more weakness here. It's almost like it wants to go sideways a little bit. And so again, this is partly why I'm not interested in shorting. In order for me to short, I need all the stars to be aligned, where it's just like easy. It's just like plain as day. And so I need to see, personally, I need to see a little more weakness in HYT to be more comfortable about things absolutely crashing from here. But XHB, I mentioned yesterday, a pretty large red candle. We had this sort of channel going up here. Let's see if I can draw on this. Nope. Okay, that's better. So we have this channel that had been going up, and then we had sort of consolidating, and then yesterday breaking lower, and so this is showing like it wants to go down. And that makes sense with today's new home sales going down. I mean, if they're selling less homes, then yeah, the value of this naturally, it looks like this market sniffed that out before the report came out today. Interesting. With stocks crashing, with treasuries crashing, it looks like not only that, I think a lot of the commodities, even REMX, my favorite metals fund at the moment, that has exposure to that, copper's showing weakness, gold's showing weakness, but the dollar, king dollar today, the dollar won against everything. Last chart, the VIX finally showing some strength, and this makes me actually get a little bit of a sigh of relief. I pointed out a few days ago how we haven't been this low in the VIX since pre-pandemic levels, around 1185. It looks like we hit on Tuesday, or closed at 1185 on Tuesday in the VIX. And so today we had an engulfing candle, 1, 2, 3, 4 of the past 5 days, and so finally the VIX is waking up here from falling asleep, is the way that I would describe it. Me and my crystal ball predicted Nvidia's earnings would be not as fantastic as the market was pricing in, and instead it was the opposite. It went up 6%, which is huge for a market cap like that. And it looks like some people bought into that idea that, that just means that the whole market is strong, very, very temporarily today, and then everything sold off. And so even though I wasn't able to see the earnings correctly, things got quite bearish anyway. And so now I'm starting to see, sometimes in the crystal ball, things, you don't see why things happen, you just see them happening, and so there you go. That's all I have for today's show. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.